How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for the data that was recorded on January 28th, 2020. Here is a brief snapshot of the positions held by the institutions as of that date. And so let's start by taking a look at gold. So as I was looking through the data and doing the latest Aruja report, I noticed something really big here. Take a look at net positions right over here, 330,000 positions geared to the long side. That is a record number. Okay, I looked through all the historical data and I did not see a number larger than 330,000. And why did it get bumped up to 330,000? Well, take a look here. We see a slight increase in long positions from 374,000 to 376, but when they drop their shorts from 57,000 to 46,000, which is very cooled off, it bumps up long exposure to 89% and thus creates net positions up in the 330s. So now we have all-time high net positions on the positive side, 330, and that was coming as price was consolidating right here. Now what have we since seen? We see a little bit of a move to the upside here, and today we had a little bit of a gap up right into some daily supply. So it leaves one to really wonder what is going to take place here. I mean, got a lot of gold bulls out there that have all these explanations as to why gold should continue higher. And I don't think they're really paying attention to the figures here. Okay, because when you look at historical data and you look at how many positions the institutions are using to move price from demand to supply, and what are the max that they've ever pushed price with, you'll see that those numbers, every time we've reached them, we've seen drops in price. I mean, it only makes sense that they're using a certain amount of money to influence the markets, but once they reach those maxes that they are trading with, there's really nowhere else to go. So I mean, if you just look at what they've done in the past, you'll see that it paints a pretty clear picture as to what we should be expecting. Not just that, but when you time it with supply and demand zones, you know, it's pretty much, you know, a done deal. We're inside demand on multiple time frames, or I'm sorry, supply on multiple time frames. So I mean, I don't see any reason why price would continue going higher. I just don't see it. For that to happen, multiple supply zones will have to be removed, and they will have to take these numbers up a lot more higher than where we are at right now. And to me, I just don't see them doing that. So for now, we still have the same bias. It's eventually going to come down, but again, it's going to take time. You know, these bulls in gold, they're looking at price, and they're every little move upwards, they're saying, you see, well, I told you it's not going to drop. Can't you see the bullishness? And what they don't understand is that we still have a lot of space here in between where price is and where this ascending trend line is. Yes, we have an uptrend on the weekly chart, and that ascending trend line is here. Price is going to gravitate to it. And if you take a look at how many more bars have to be filled here, you know, 1, 2, 3, 4, you could have 4 weeks, 5 weeks until that happens. So I mean, we shouldn't expect anything to happen right now, because it's just not going to work out that way. It never does work out that way. So we continue to watch and learn from it. Oil. So price dropped very significantly right down into the weekly demand zone, and that was caused by a massive increase in short positions. I mean, take a look at that. That's massive. 78,000, which was cooled off. Okay, cooled off position, into 126,000 short positions. Okay, that dramatically reduced long exposure from 88% down to 82%, and net positions, big decline, 520,000 to the positive, down to 461. So that's a pretty significant drop if you ask me. And so price is now down inside this weekly area of demand. We've been stuck in a range for a while, and right now this can break and it goes lower, no problem. We know that, we're still inside some major demand here, so we know what to watch for in terms of trade signals, but right now we're waiting. But the data is showing this push lower was from a dramatic increase in short positions. We'll continue to monitor this one. Now we have the dollar. So we take a look at the data, and what can we see? For quite some time, since December 10th, long positions were at 30,000. They used contract expiries to reduce them greatly down to 23, and since that time they've been pretty much neutral with their long positions. Okay, now we take a look at the charts. This latest piece of data comes as price was rallying up towards the weekly supply zone that we had mapped out. We're since getting a drop from that, which is exactly what we laid out in the observation journals in the school. And so now price is declining from that supply. But as price was rallying up into that weekly area of supply, we had this increase, 25,000 to 28,000. Shorts pretty much not doing anything. If you take a look at net positions, they're up from 12,000 to 16,000. Look at the coloration of the cells. Is it telling us anything? Not at this time. It's still blue, so we're neutral, the dollar right now. Okay? And plus, you take a look at what we're stuck in between, it's not good for trading. So we're waiting for the breakout. Now we look at the Aussie. This one here, price was dropping, and lo and behold, massive increase in shorts, 61,000 to 72,000. So what do we see here on the charts? We see that they were short, took profits, short, took profits, short, took profits. Now they're short again. Okay? But let's go back to June, right here. And that was right over here. Big decline. Okay? They were 108,000 positions short. Okay? Right here. 108,000 positions short. Now they've since taken profits on those shorts and banked those profits. Now take a look at where we are on the chart now. Same level, but this time with 72,000. So you see how when they were at 108, they were already getting close to maximum size. So what did they need to do? They need to take profits. And that's what they did. And now they're starting to reaccumulate those short positions at the same level. So you see what's going on here? You see the picture that this is painting? Okay? Keep an eye on that as the weeks unfold. Now we got the US Cat, and we see that price was rallying up here. As price was rallying, we got a increase in longs from 36,000 to 41,000, and we got a slight increase in shorts from 74 to 76. Bottom line is net positions became less bearish. Okay, we take a look at the coloration of the cells. We were in neutral territory. We slipped into bearish territory. And you might be asking yourself, why so bearish? This doesn't make too much sense. Why so bearish? If the signs on the charts are telling us that price is likely going to continue higher, why are they so bearish? Well, take a look at price over here. Okay, it's not been going up. Look at this. It's been going fairly down. So the bearishness explains what's happening on the charts. All right. So now take a look at this. We have still bearishness in terms of positions, a slight bearish sentiment. The charts are telling us something different, so we are not going to make any moves on this one until we start seeing a little bit more of these shorts being closed off and an accumulation of a long. But I think there's a very good chance that we'll eventually see price move higher. We already have some signals that we're watching for this, and when they do get produced, I'll post them in the observation journal or under the trades on watch. Okay, now we look at the US Swiss franc. Price was consolidating before rallying up into supply, and a slight increase in shorts, decline in longs. Longs are cooled off, and we've entered into bearish territory just a little bit further. Last week we were at negative 1.536. Now we're at negative 3,497. Nothing too dramatic. We take a look here, slightly bearish. Okay, we were neutral, now slightly bearish. But I don't, listen, there's room for price to drop down to this area here, and there's a good chance that we might see a little bit more of a low, because we are expecting a little bit of weakness to come in with the dollar. But overall, we really have to see a strong signal here, because we know what to expect from the dollar pairs, but this one we really want to see some stronger signs of what the institutions are doing. Now we have the euro. So the euro was dropping here right through an ascending trend line, and as it was dropping they increased their longs from 168 to 180, and then take a look here, shorts 215,000 to 239,000. That's dramatic. That's big enough to cause short exposure to increase from 56% to 57%. Net positions are up as well, minus 47 to minus 58,000. So what we're seeing here is a slight increase in short positions, and bottom line is coloration of cells are neutral. We are seeing some good signs that we can expect a little bit more downside on the euro at this point, but things are not 100% clear, not even 90% clear. Once they get up there, then we'll have a better indication of what is likely to take place. But in terms of the positions, big increase in shorts, but then again price was dropping, so that was somewhat to be expected. Now we got the pound US dollar. We look at the pound US dollar, we see that price was consolidating right here, and as it was, they closed off some of their longs and they increased some of their shorts. No big deal. Now if you take a look at the coloration of the cells here, okay, you'll see that yes, long exposure dropped somewhat, but we used to be neutral, and then in throughout here they start to become a little bit bullish. Now there's definitely room for price to continue moving upwards, but as they got bullish throughout here, they're slowly declining that bullishness, but that's okay. Bullishness slowly declining, we can see a continued move to the upside. Very good chance of that, and this indication here is very good for us. Okay, this is telling us after all the bearishness, this signal is telling us this bullishness is pretty strong. So waiting for the right signals to get in long on this one. US dollar, Japanese yen. We see that there was an increase from 81 to 95, and then a slight decrease right back to 81,000 long. And here we had a bump up to 50,000, and then it dropped down to 45,000. Bottom line is short exposure increases 1 point, and net positions decrease 44,000 to the positive, down to 36,000. So not much going on here. Price is stuck, and it's not a good time to trade right now. We got the descending trend line here on the monthly chart, which is forcing price downwards, and you can see that reaction off of the weekly area of supply. And now we've got this here, and it's pretty much trapped. Coloration of cells neutral, not a good time to be engaging in this chart. And the Kiwi dollar, we see price was consolidating before it took out some demand, and they're getting slightly bullish in terms of net positions, but we look at the coloration of the cells. We were bearish, now it's more neutral, and positions, they close off longs and they close off shorts. So not much to see in terms of positions, but bottom line is they are very neutral. Okay, and just by looking at what's taking place on the charts, it's not a good time to be getting involved in this pair. Alright, ladies and gents, again, that is your CFTC report for January 28th, 2020. If you want to find out more about how we do our analysis, visit us at www.whiteoakfx.com. Thanks, have a good weekend, and we'll see you next week. Take care.